All right. Good morning, everybody. Good morning. Good morning. Today is
Good
Tuesday,
morning.
July. Good morning. Today is Tuesday, July 14th, and this is the Maximum One Greater Atlanta Powers Ferry sales meeting. So hello, everybody. It is wonderful to see everybody's faces or pictures. The pictures that people put up for Zoom are so funny. They remind me of the old joke about real estate agents putting their photos on their cards, and they're like mine is still a glamour shot from back in the 80s, for those of you that remember glamour shots. Anyway, welcome. We are going to get started in just a couple of minutes. Well, right now, I have a couple of comments I'm going to say a little bit later on. But before we started, I did hear a lot of comments on taxes. And as we know, this year, the government did extend the tax deadline. And then, of course, you can still, I think, file extensions from this extension. I think the deadline got extended till tomorrow.
Yeah.
And then, like any extension, you can still file extensions. So we, just to remind you, Maximum One mailed your 1099s to you to whatever mailing address we had on record for you back in January. If you have not received it, you need to contact Donna Black, who manages our accounting department, and her email is agentbilling@eagentweb.com. If also you, well, that just reminds me in general, make sure that we always have your current mailing address. Especially for this reason, that we need to mail you your 1099s. At one year, we tried doing it electronically, and that was just a mess. So we're just mailing them by US mail. So that's all I'm going to say for now. And then I will have a few comments a little bit later on. So Jane, I'm going to throw everything over to you so you can MC this event and let us know who will be next. You're mute.
Sorry about that. I was afraid my dog was going to bark. Good morning, everyone, and thank you so much for joining us. It's so good to see everybody, even if it's on a computer screen. George, would you like to take the first? Would you like to give us some information first, and then I have some interesting information that I would like to share also.
First, good morning. How's everybody doing? Like they said, I'm very happy to see everybody online. That's excellent. Now, let's just start by me saying that I'm just excited to announce the names of some of our top producing agents for June. I'm going to be announcing the names right now. And I'm very, very excited. That tells me that there is business out there to be made. You know, if some people are killing it, so to speak, that means that there's some business out there. So I'm just encouraging all the agents on the Zoom to just continue to be aggressive, follow up, make your calls, and so next in August, maybe some of us might be part of this top producing agents. Okay, I'm going to announce the names, and I have the certificates here, so maybe they might have to come to the office to get it. The first one is Steve Matthews. Congratulations, Steve. And then Bobby Poole. Congratulations, George Bishara, Elcida Quills, Biona Kerr, Judy Horn Parker, Precious Edit. Oh, Precious, congratulations. Chris Zigloff, Marlon Marino, and Blair Hetchenbeck. These are the 10 top producing agents in June. Somebody once said that knowledge equals confidence and ignorance equals fears. Knowledge equals confidence. The fact that we are licensed agents, that means we have the knowledge and the confidence to go out there and produce. Of course, we know there are a lot of challenging. It's very challenging at this time, and of course, our safety and our health is our concern. But there's still business out there to make. So I'm encouraging all our agents, all our vendors, whoever is on the Zoom, to make sure that there's still a lot of business out there to make. I don't know about you, but it seems like with this pandemic, it's one of my busiest time I've ever been, for whatever reason. So it's exciting to see that. So I'm encouraging all of us to go out there and just produce. Jean, over to you.
Thank you so much, George. George is busy. He keeps telling me that he's busy. He has 2 new listings this week. So, and he has been busy for quite a while. I would love to share some of the market statistics. Where I get this information from is Dana's email that she sends out every Sunday to all of the agents. So for the month of June 2020, we are 3.14% above 2019 for June of last year, which is amazing during this pandemic. FMLS gives us that information. The next one I have is we are up 14.1% of showings as of June 29 of this year. And this year from this year's pre-pandemic peak. So maybe that's like from February or March, which is 8% higher than the same time last year. And showing time is where we get that information. There are 22.5% or 56% fewer listing withdrawals 4 weeks in the 4 weeks ending June the 27th of this year. So compared to the same period in 2019, and we get that information from FMLS also. I would also like to tell you about some of the virtual classes that Maximum One is offering on the 15th, tomorrow, from 9:30 to 12:30. It is the ultimate listing system. You just have to go to the calendar, the Maximum One calendar, click on register for the meeting, and then when you do that, it will send you the link so you can join the virtual meeting tomorrow. On the 16th from 10 to 1, we have, all of these are virtual. We have understanding values in this crazy market. I forgot to write down who that was by, but it's one of our...
D.S. Murphy is teaching that one.
Thank you.
You're welcome.
D.S. Murphy is teaching that class. On the 22nd, from 9:30 to 12:30, we have Mortgage 101. On the 23rd, we have 2020 Contracts Review. And a very important class is July the 29th. Dana is going to be teaching from 9:30 to 12:30, Licensed Law for Agents and the Broker course, which I absolutely have to have that class or I cannot renew my license. I thought I had it, but I did not. Another thing that I would like to share today is condolences to Carolyn Miller and her family because her daughter lost her battle with cancer. The daughter's name is Tammy Alexander, for anyone who knew her. So I think that's about all I had. We're going to hear from John.Bohannon of Movement Mortgage. And then we're going to, no, I take that back. Please excuse me, John. I'm going to put somebody before you. Larry Hudson of Champia Inspections. And you are on mute, Larry, but if you would like to take over, that would be great.
And just a couple comments. Larry, I'm going to make you host so you can share your screen. Carolyn Miller just lost her daughter this weekend to cancer. Last year, she lost another daughter. So Carolyn, within a year, has lost 2 daughters to cancer. So please send her prayers and pray that God comforts her with comfort and peace. She could definitely use lots of love and support right now.
Absolutely.
So, yeah, very, very difficult. She has been with Maximum One for years and years and years. So. All right. Larry, I am going to make you host, and then you are able to share your screen. Are you familiar with how to do that?
Yes, ma'am.
Okay. So give me 1 second and I will. All right, you are host, sir.
All righty. All righty. Good morning, everybody. My name is Larry Hudson. I am with Champia Real Estate Inspections, as you can see atop the slide there. Coming to you live from the Champia office over in Peachtree Corners, to which it's me, myself, and I believe it's been me, myself, and I since sometime in March, coming here each day and attending to business while the remainder of our staff works remotely, as I know the majority of you are as well. So hope you all are well, hope all your family and those you care about are well. We're still operating, of course, being mindful that there's more out there than leaky roofs and bad plumbing and ancient air conditioning systems. So it's been quite the high wire act, but hopefully it's the same for y'all. But we're already more than 90% of what we did in last July. So I think the business that we didn't get in the spring has now moved into the summer, which is a bit of a challenge for our inspectors working 2 inspections a day and having to deal with the heat. But it's either that or not have the opportunity to earn money. So they're out there doing it and enjoying every minute of it. I have a quick presentation here about certification. With all that is going on in our world at the present time, you know, it's important sometimes to go back and reflect on the basics, if you will, the things that are often taken for granted. And then if some of you folks, I believe one of the folks that introduced earlier said that they were new to the business. The map that you're looking at, hopefully, can everybody see a map? Dana, can you see a map?
Yes.
Okay, all right. The map shows the United States, and what it basically shows, it's a binary display of which states require licensing and which states don't. Now, if you look in the lower right-hand part of your screen there, you'll see one island of the light blue, which means no, with the 2 red arrows pointing at it, and that would be Georgia, okay? So for those of you who were not aware, I mean, there's you know what you know what you don't know, and you don't know what you don't know. There are no requirements in Georgia. And when I say that, what do I mean? Okay. Are home inspections regulated? No. Is field training required? No. Is experience required? No. Are CE credits required? No. Is licensing vetting required? No, 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 no. Reminds me of growing up in a house with 4 kids. I think that's all we heard. But just so that you know, and not to be using the word no too much, the only piece of legislation on the books in the state of Georgia was a trade act back in 1994, which is, if you think about it, before the internet. It states that there needs to be a scope of work. There needs to be an boots on the ground inspection. You can't do it from afar. You have to actually walk through the home. And then also 2, a written report is the deliverable. So it is quite antiquated. You can see all of these no's here. Well, what do you do to protect yourself? Okay. If you're working with home inspectors, obviously some of you folks have been doing this a while. You have your same group of people that you've been working with. And we at Champia, we respect that. We enjoy the loyalty that a number of our longtime agents have been giving us. We have agents now that are close to 200 inspections with us over the course of time. And that comes obviously with being in business for 33 years. But what you want to do is look and see, will your inspection meet recognized standards? If you're interviewing inspectors, okay, are they following some form of guideline, or are they just doing the old seat of the pants thing, which may or not work depending on where you are and what the conditions are? The two largest organizations that have standards in the United States are ASHI.org, which is what Champia is associated with, and then obviously the NAHI.org or InterNACHI as it's known now. Do you belong to a professional home inspector organization? Okay, there's a number of groups that inspectors can be a part of, as it were. And then number three, okay, I see a lot, I visit a lot of the websites on Facebook for different real estate agents and all like that. And obviously amongst agents, you know, how many years you're in the business, that's really not, you know, something that is a big deal. Somebody could be in the business for 30 years and may not have had the career that someone's had who's been in the business for 7, but how experienced are you? Is a key question to ask inspectors. My owner has a problem whenever he hires a guy that's a little on the younger side, trying to get, you know, him in the door and getting him to work with people because people want an experienced home inspectors, and the majority of our guys are, as I like to say, seasoned, if you will. And how do you keep your expertise up to date? You all have to, I heard Jane discussing it, keeping your license current vis-a-vis the CE classes and the credits that you have to accrue. Home inspectors don't have to do that. So all the time that you spend sitting in classes, being online, doing the things that you need to do to keep your license current, that's not required. So it behooves you to make sure that you have an idea of what the inspector brings to the table. And it's not uncommon to be asked for references. We get that all of the time. Here are some of the certification entities, groups, if you will, that are out there. There's a few more that are more of clubs, but these are the ones that are recognized in our business. And Champia, we are associated with ASHI National, ASHI Georgia. My owner is on the board of ASHI Georgia. And then we're also a member of the International Code Council. And we do have certified code inspectors as well. Why ASHI, or insist on ASHI inspectors? It's a nationally recognized certification, the largest group of home inspectors in the United States. The second one is probably the most important for agents. We're partnered with a number of agencies. We're very thankful for the affiliation we have with Maximum One and all of the consideration that we receive from the office over there on Charles Mill Road. But we're partners at other locations where there are companies that aren't certified. And basically what happens as an agent, if you're working with an inspector that's not certified, you're carrying their liability, okay? So you want to make sure you're working with certified inspectors, because if there's a problem with us. We have E&O insurance. We have a number of different protections. We carry the burden. If the inspector is not, then the agent carries the burden. And I don't know if that's something that you need on top of all the other things that you've going on. But it's an insurance of professionalism. If you're looking for information, or I had a question yesterday, somebody was looking for an inspector down around the Lake Sinclair area, which is outside of our footprint. And I'll show you what our footprint is in a minute. But if you're in need of an inspector outside of the metro area, your best bet's to go to ASHI.org or to go to NAHI.org, and they'll find you one in a given area code, different zip codes. So at least you know you've got someone who's certified on your team. As far as the Champia footprint, for those of you who need an idea for who we are, where we're at, up here, that little box is our office, Peachtree Corners, which is southern part of Gwinnett County. We go up into North Georgia, but mostly the metro Atlanta area is our coverage area. And we've been covering that area for 33 years, residential, commercial, new construction. Which new construction inspections are going through the roof for us with the pre-drywall and the finals that we're doing more and more and more of those. And obviously with inventory being so low, builders can't get them up fast enough. All righty. So a little bit about Champia, 33 years of residential, new and commercial inspection experience, as I said. 24 turnaround on reports. We usually get them to you same day, which I know is important with your due diligence, the limited amount of time that you have to do all that is that you need to do so you can get to the table and close. ASHI certified inspectors, and our mission is to inform the buyer regarding the home's condition and make the inspection a learning process. That's what we're here for. We also, I'll try to get a list of attendees from Jane a little later after things settle down after the meeting. I'll send you out our information via email if I can get your emails, and also a discount code. So if you want to give us a try, we'll give your buyer a little bit off for the first go round. So that's the end of my presentation. If you have any questions so the meeting can keep moving, my email is real simple. It's Larry@Champia.com. Just send me the questions. If I can't answer the question, my owner is a certified ASHI inspector. Our general manager is a certified ASHI inspector and certified code inspector. And I have 12 inspectors that I can query if I get a question that I can't answer. So I appreciate the time. Jane and Dana, thanks for having me. And the best to you all through the month of July and however long this thing takes to go away. May it be good for you business-wise, but even more importantly, may you be well and your friends and family be well as well.
Thank you so much, Larry. We certainly do appreciate that. I'll write down all of the names of the people that have joined us today, and I will send you an email with their email address so you can send them the information you wanted to, okay?
All right. Thank you very much.
Well, we thank you, sir. Have a great week, and yes, stay safe, you and your family. Okay, now we are going to turn it over to our preferred lender with Movement Mortgage, Mr. John.Bohannon. Good morning, John.
Good morning, everyone. Great to see your all smiling faces, and great to hear those really great statistics that you shared, Jane. We've had kind of the same experience, and we're super grateful for real estate still thriving, and people still wanting to buy houses regardless of all the bad news that's out there. The housing market is really strong, and we are super grateful to be a part of that, and grateful for you guys as well. So with all that being said, the market is very hot. Interest rates are really near all-time lows, if not at the low of all time. So, there's just a great opportunity for people to upgrade their house and not have to spend a lot on a payment increase. Or people are refinancing to improve their home. Home Depot stock has flown up. I'm doing several loans for people that work at Home Depot, and they're growing by leaps and bounds, which really helps the Atlanta economy, along with the other things. We actually talked to a movie actor 2 days ago who moved here from California, and he said he's 3 times busier than he was when he was in LA. So Georgia is such an amazing place to live, and we're super, super grateful to be a part of it. With all of that being said, our company has changed a few things that are actually really big improvements, and I just wanted to share those with you guys right quick. Because of the pandemic, we decided to start servicing all of our loans. In the past, we would only service about 20%, and then we would sell the other 80%. And what happened during the pandemic were the 2 largest servicing companies just basically said they didn't want to take on any new loans until there's a vaccine or some type of immunization against gosh, it's got so many names, but against COVID-19, we'll just say that. So they're not taking any new ones. So as a part of still servicing our realtors and our buyers, we decided let's just service all of our loans now. So that's what we're doing. What that specifically does to help you guys is if you have a buyer who needs to sell their house and the house that they want to make an offer on won't take a contingent contract, which I'm hearing a lot of that. The buyer can, if they have enough money to just come up with enough down payment, the minimum down payment, they can do that. And then once they sell their home, then we'll allow them to put the rest of their down payment money down on the new house that they bought, and we'll change the monthly payment. We call that recasting the loan or re-amortizing the loan, but it allows them to get rid of mortgage insurance if they had it, lower their payment, all that kind of stuff. It's not a bridge loan. They have to qualify to carry both loans, but a lot of people can do that, especially if they're a double income household. So just wanted to let you guys know that we are going to bat for you guys to help with everything we can to enable you guys to sell more houses and not have to, you know, get constantly, you know, the second place when you're trying to make an offer on a house, because, you know, nobody wants to be the bridesmaid. Everybody wants to be the bride. So we would like for you guys to be the bride every time. So that's one really cool thing that we're doing. Also, all of our credit score requirements now are a 620 credit score. So I know a lot of our fellow industry banks are higher than that, and we've actually made it just be a 620. That's for everything. So that's super important. And then also we are closing loans in 30 days. So if you have a borrower who's been pre-qualified with somewhere else, which a lot of times that happens now, because people have relationships with their bank or who their previous lender was or the last person that refinanced them, and they'll reach out to them and bring their letter to you and say, hey, I want to use this company. That's great. Be super important for you before you write a contract to find out if that bank can close by the time you want to close, because there's not many banks that are closing in 30 days. I get that question almost daily now. So we are still closing purchase loans in 30 days because all those loans go to the front of the underwriting line. All the refinances go to the back of the line, and they have to wait their turn behind all the purchases. So 30 days is what we can do. And hopefully that will help you guys again when you're making your offer to the seller. If you can close faster than somebody else, they're probably going to pick you instead of having to make you, you know, pay even more. That's a really, really important negotiating tactic to use. So just make a little note about that. And also, I want to just mention this, how we're able to do this is our company was set up about 1.5 years ago for everyone to work from home. Because we're a nationwide company, we have to keep our service levels up even if there's an ice storm or, you know, a hurricane in a part of the country or a bad snowstorm that can knock out power and kind of paralyze a region for a while. Well, our company said, wow, we can't afford to have that happen and have a disruption for people that need to move. So they gave everybody laptops and set up a lot of security so we can't print certain documents that are private documents or very personal. So there's no, you know, nobody's going to have bank statements laying around their house because our computers aren't able to do that, but we can view them all online. So we all were able to start working from home about 1.5 years ago, including underwriters, closers, funders, every single person. So when the pandemic hit, we're like, well, it was great seeing you guys. We'll see you when we can reopen again, but we're still open for business. So that's how we're able to do that. Currently, our underwriting turn times for the initial underwrite is 2 business days. That's from the day we get everything from the buyer and your contract. It's in front of an underwriter within 2 days. And then when we receive the rest of the items that we need from them, like updated pay stub or bank statement or a copy of their earnest money check coming out of their bank, those kind of things that happen down the road a little bit, that takes about 4 or 5 days from whenever we receive it to get it underwritten. And then there's obviously time for the attorney to prepare their package and that kind of stuff. So that's our turn times that create that 30-day time period. I want to talk about appraisals for just a minute. Appraisals are taken between 7 to 10 days to get done. So I encourage you guys to write your appraisal timeline for somewhere between like 15 to 21 days. It needs to be 21 if you're going to take a week or so to get the home inspection worked out. Because a lot of times people don't want to pay for the appraisal until they know, hey, the inspection was good. So just keep that in mind. 21 days is about the average. We can speed it up if you speed up the home inspection or if the buyer pays for a rush on the appraisal, and that usually costs about $100 to $150. So that's the timeline on that. 2 other things that are important to know: if you do a VA loan, the VA will allow the appraiser to just drive by the house and not have to go inside. So they're still being very protective of the appraiser and the homeowner and not wanting to do anything that would possibly spread the COVID-19. So they're allowing the appraiser to just drive by. The appraiser can go in, but if you want a drive-by, you can get that. Also, conventional loans are allowing that also by a request. And then an appraisal may not even be necessary if the buyer has good credit and they're putting somewhere between 15 to 20% down. Then oftentimes the computer system, that's the underwriting software that decides yes or no on everything in the loan, it can decide to waive the requirement for an appraisal, and then the buyer can choose if they want to do one or not. They don't have to not get an appraisal if they want one. They can still have one. Or if the computer system says, hey, you don't need one, and they decide, I'd rather not spend the money, I feel like the value's there, then we can just do no appraisal at all. And I get several of those every month. So it's not terribly often, but it's often enough to where if you have somebody especially that has a big chunk to put down and good credit, chances are they'll get that. So that's that. As far as, I always like to talk about the overall, American market in the United States economy. I'm sure everybody's, got access to this information, but sometimes, you may not have heard it. But unemployment, which was the big scary thing that happened during the pandemic, when the real tight shutdowns happened, is going down dramatically. In the June 20th unemployment numbers from the United States Labor Bureau saw that we added as a country 4.8 million more jobs to the economy. And what that did was that brought unemployment down to 11.1%. Still not great, but so much better than the 15% numbers that we were hearing just 60 or 90 days ago. So there's been a lot of talk about, the economy and what's going on. And not everybody has been fortunate to have not had a lot of impact in their industry, as us in the real estate and housing industry, but other sectors of the economy did. And they're starting to come back now. So we certainly need to, keep them in our thoughts and prayers, and, still keep expecting great things to happen, because the recovery is definitely happening. So one last thing I'll mention is interest rates, and why they're staying where they are, and they're projected to stay where they are for about the next 6 to 12 months. A couple of really big important factors are, number one, the Federal Reserve said they're not going to raise interest rates for the next 12 months. That was their plan for right now. Also, they are buying an extremely high amount of mortgages from banks. And whenever they buy them from banks, they're basically replenishing our money to be able to loan the money back out again. So when the federal government buys a loan, they're buying not just one, but they're buying a couple of thousand loans all packaged up. And then that replenishes the money that we have to loan out again. And what happens is that loan, or those groups of loans, still stay on our balance sheet as an asset. And we're just basically pledging it as collateral to borrow more money to keep lending out. That's how so much money gets loaned out, because no bank has 20 or 30 or $60 billion to just sit in cash. There's not that much available just to keep flowing around. So we have to do it with where we have an asset, and then, which that's a couple of thousand loans, and then we hold that as a piece of collateral to collateralize more money to borrow out. Just like a house is collateral, all these loans are now an asset for us. So when I say the government's buying loans, they're just lending us the money to be able to loan out in individual loans. But they're actually doing that at a very high pace. So they're buying from banks about $2 to $5 billion a day, which that's more than they bought during the housing crisis. So the United States government has been very, very dedicated to helping the economy stay strong, because housing is one of the largest sectors of our economy. And the more healthy that is, the more healthy that our economy can go and grow. So it looks very, very good for everyone in real estate to have a great year this year. I'm super happy to be able to say that. And, we're certainly behind you guys and want to help you every way possible. So With that, I'm going to go ahead and sign off. If you guys have questions, you're welcome to call me, text me, or you can put them in the question box here, and I will reply back on the chat if you do. All righty. Thanks so much, everyone.
Hey, I'd like to say a good word to John. He was the representative for a buyer on one of my listings, and we had a great transaction. John provided information to my seller every step of the way, and it was a very smooth transaction. John also answered calls when I called him directly, and was just very happy with the whole process. Thank you, John.
Thank you, Mark. That was very nice. I appreciate you saying that. I owe you dinner, I guess. I didn't know you were going to say that, but
Yeah,
I appreciate
yeah,
that.
one or 2 years from now, whenever it's safe to go outside the bunker again.
That day you have to take a rain check, but it'll be good. Thank you so much. I appreciate it.
We thank you, John, for everything you do for us. You know we do, right?
I sure do, Jane. Thank you so much. I really appreciate you guys. Y'all are awesome. Very
good. We're going to turn it over now to one of our preferred closing attorneys, Mr. Doug Dean. Are you with us this morning, Doug?
Hi, Jane. Yes, I'm ready to go.
Very good.
Jane, it's great to see everybody this morning. To echo on to something that John said, it has just been amazing how well our industry has managed through this time, through the pandemic, right, that people are still buying, selling, and refinancing homes. In our past economic recession, it seemed like real estate was right in the middle of the problem. And I feel like right now, real estate is right in the middle of part of our solution for getting out of the problems that we're in. So we are fortunate that we're in an industry that is still managing to survive and thrive through these difficult times. With that in mind, one thing that I say whenever I have the opportunity to speak to people is, first and foremost, is stay safe, keep reading, know the things that you should be doing, and do what you're supposed to do, and don't do what you're not supposed to do. So we care about you, and do the right things. Like my mom used to tell me, make good choices. So make good choices and stay safe. I want to thank some folks that we've had the pleasure of working with recently, including George, who I see on the call. Hi, George. Donica, and some others. I consider it personally, I take it as a compliment whenever anyone selects our firm, and I'm delighted that we've gotten to work with some folks. I taught a CE class last week. It was the first one I've taught live since the pandemic started. And it was in the office on Terrell Mill. We did the Code of Ethics, and we had a good time doing that. So it was good being back in the classroom. One thing I want to remind all of the agents to do is what I call stay in touch with your community. The people that you work with, your buyers, your sellers, the people that refer to you. And one thing that we did recently to stay in touch with our community is we hosted a little virtual happy hour. Did it last Thursday at 5:30, and we had an absolute blast. It went better than I ever thought it would. We had an amateur mixologist, which by the way was me, show everybody how to make a fun new cocktail. And we played an online trivia game that we could all play at the same time and see all of our scores on the leaderboard and whatnot. So it was a really fun event. I mention it because if you would like to do something similar for your community, I called it a great dry run. I learned a lot, and I can reach out to me if you'd like some tips on throwing your own little virtual get-together for your community, and stay in touch with your group. The other thing that I'm always proud to say, and you'll hear me most every time I speak, I'd be surprised if you don't hear me mention how we want to be a part of your team, that we're not in business to just be a vendor or someone that supplies a service, but being an industry partner to you means just that. We're a partner and we're here to help you. I had an agent yesterday that I didn't know. He was from your office, and he said, I need to get a copy of a DeKalb County plat book page because the surveyor's doing the survey and he needs me to get the plat book page. He said, but it's a really old one and it's not available on the GSCCA. Can you help me? And I said, of course I can. I've got a title examiner who's in most all the courthouses on a daily basis. So I picked up the phone, made a call, and within an hour or two had him what he needed, emailed it to him. And that's just the kind of thing that you should expect from a partner or a team. Oh, I didn't even realize you were on the call.
Yeah,
I'm so sorry.
Yeah. Thank you. And my seller was thrilled, and I got a very good note back from the surveyor too, who couldn't believe you got it so quickly.
Mark, I didn't even realize you were on the call. I'm sorry about that.
No problem.
But
I don't have my hat on, so you don't recognize me.
That's exactly right.
Yeah.
The moral of the story is, what good is a partner if it's not somebody that you can reach out to help you in your business? And that's really what we're here to be, an industry partner, which is somebody that helps you succeed, get ahead, and survive in your business, and it works well for both of us. So, Mark, I didn't see you on the call. I'm glad you're here.
Yeah, no problem. No problem.
It was just an example that we are really here to be a resource and to help you, and of course, hopefully to help you on some of your closings as well. And Jane, that's pretty much what I had prepared for this meeting. Key points: be safe. The market's still there, so you need to keep working. Stay in touch with your community. If you'd like to throw a little virtual get together, reach out to me, because I've done it once. And you know what they call the person that does it once? An expert. So if you haven't done it, just reach out to the expert. And know that we are here to be a resource to you guys, to your office, and we're always glad to help. Want to make sure that you can always reach out to Shafritz and Dean, and that we're here for you. Thanks, Jane.
We certainly thank you, Doug, and I look forward on August the 7th. I have a back-to-back closing with you all. The house they're selling is at 9 o'clock, and the house they're buying is at 10 o'clock. So I will see you then. Look forward to it. And we thank you for all the good information today. Miss Dana, I think that's all I had lined up. Of course, I know you're full of information. so we'll
Thanks,
give it back to Dana for a minute, okay?
Awesome. Thank you so much. So I've got a couple comments, and then Doug, if you are up for it, I'd love for you. I know this has come up with one of our agents this week, and I was not 100% convinced of the answer, but I know you have. If I'm wondering if you can walk us through the GAR assistant exhibit. Are you comfortable? Are you ready to do that right now if I pull it up on the screen?
I'm sorry, which exhibit?
Assignment.
Sure, the assignment agreement.
Okay,
we work a fair bit with investors that do some assignments, but I will tell you. Yeah.
Hang on.
Mm-hmm.
Let me just in general, I'm going to preface everything, and then I'm going to pull up the form on my screen so everybody can see it, but I'm going to let you walk through it, if that'll work for you. You guys, if you are working with an investor who is buying a property and going to assign it to somebody else, the GAR and the RE form contracts are not assignable in and of themselves. You must get seller's written permission. GAR has an exhibit that you need to complete that brings that permission into play, but you have to figure out about commission and so forth and so on. So Doug, now let me share my screen, and then you can talk either over the exhibit or through the exhibit. Can everybody see it?
Yes.
This is GAR C007 agreement. Shoot. I'm sorry, I've got two things on my mind. Let me pull up the assignment exhibit. This is GAR F279, assignment of purchase and sale agreement rights. Okay, now Doug, the floor is yours.
Thank you, Dana. Dana, and I am honored that you've asked me to do it, because I think of you as the GAR forms expert, and I usually take my GAR forms questions to you. A couple of key things that Dana noted. First is that the contracts are not assignable without the seller's permission, and the GAR form is even worded to say that the seller doesn't have to give permission for any reason at all or no reason. So the first thing about an assignment is the seller has to be on board. Second is you've really got to think these things through. Sometimes it's very simple. Maybe I bought it in my individual name and I'm just assigning it to my LLC. So I'm really not changing any of the terms. The case with some of the investors is they've got it under contract and they want to assign it to someone that's willing to take that contract and pay more than what it's under contract, so the person assigning it can make some money. And that's where it's designed to really, the key things, get seller permission, think it through, and capture all the terms. The assignment is made between the seller, the original buyer, and the new buyer. They also call the original buyer the assignor and the new buyer the assignee. The rest of it is filling in, key information from the contract, the date, the address, county, and so forth. Next, we get into the purchase price that's going to be paid for the assignment. And Dana, correct me if I'm wrong, but what I'm looking for here is how much are you paying to take over the contract? In the case where I'm assigning it to my LLC, well, I'm not paying anything. I'm just changing the name. So I'm stepping into the shoes. My LLC is stepping into my shoes, but I'm not paying myself anything. When you have investors, you want to know what is the assignment price. Dana, what's your understanding? Are we looking here to capture the assignment fee or the difference in price? In other words, if it's $100,000 and I'm saying, Dana, you can take over my $100,000 contract, but give me $10,000. Are we looking for the $10,000 or the $110,000 in this case?
Well, it's a bit confusing, and this really is not. This isn't an exhibit to the contract, so it gets very confusing, and this is why I sent the agent to you. We do have a lot of agents that work with assignments. So like you said, if you're just assigning it to your LLC or something like that, that's a different thing. But generally speaking, what happens is you'll have an investor that will go under contract with a seller. Then they don't want to live in the house. They just want to tie up the house. Then they'll go find the end buyer who wants to live in the house. And for whatever reason, I don't know. They will sell the house they will assign their interest in the contract to the end buyer. So really because it's not an exhibit to the contract, so the buyer A is under contract with seller for a certain price. This is not an exhibit to the purchase and sale agreement. This is just an agreement, but you do have to get the seller's permission. So I guess, Doug, this really should be the difference in price.
Dana, that's what I wanted to hear you say, because that was my understanding. And the example I was using, where it could be zero, I'm just letting someone step into my shoes. The assignment price is zero. In the example I made up, it's $10,000. You're paying me $10,000 to step into my shoes in the contract.
Correct. Because this dollar amount here in this paragraph 2 is just between the assignor and the assignee. It is not any money changing hands between the buyer and the seller.
I just wanted to make sure you read it the same way that I did, and you do, and that is, this is essentially how much are you paying to have the contract assigned to you. So if I've gotten the contract at what I think is a good deal and you want the contract and I say you can have it, I'll assign it to you, you just pay me this amount, which the two blocks are, you can pay me now or you can pay me at the closing of the sale. And I see it done both ways.
And then this part is the confusing part also, Doug, this paragraph 6. If you could sort of talk us through your understanding of that, that would be wonderful.
In essence, what we're saying is, did the purchase price go up such that the commissions are tied to the purchase price? Or are we saying the contract's still the contract? Someone's stepping into my shoes, taking over my contract, and the agents make the same commission. But the other thing this contemplates is, what if an agent brought someone to me to take over this contract? How are they going to get paid? Are they paid a commission for finding someone to assign the contract?
So how would you fill that out? So basically, if there's no other brokers involved, so there could be, so the listing broker typically stays the same. The listing broker is typically the agent or the brokerage that represents the seller. So here's where it gets confusing. If there's one agent slash broker that's representing buyer A, and if it is the same person that also, like if that, usually buyer A is the investor, Usually the investor, him or herself, will find the end buyer and there's no other agent involved. If that is the same, then all of this becomes NA, because it states right here, in the event that a licensed real estate broker other than the listing broker associated salesperson or selling brokers associated salesperson per the actual binding purchase and sale is the procuring cause, the following shall control. So if those people stay the same, if there's no other brokerages involved other than the original brokerages from the original purchase and sale, this all becomes NA. It gets a bit confusing, however, if, like I said, usually the listing broker is the same. Usually the seller doesn't change, it's the buyer. So if you have one agent slash broker that's representing the investor, and then there's another broker agent that's representing the end buyer, then that person's commission needs to be described here. Is that your interpretation, Doug?
Yes, and you've said that better than I was trying to say it, but you started off on the right foot, and that is, this is contemplating, what if we have a third agent, not the listing agent or the selling agent, but a third agent who has brought the assignee to the assignor. This is where we describe how they're paid by whom and what amount and so forth.
And so basically, if you guys are, and then it gets signed here by the assignee, which is the end buyer, which would be buyer number 2, and assignor, which is buyer number 1, who's under contract with the seller. And then the seller has to sign it to give consent that this can take place. Because all of the, and you typically, these are cash deals, because if there is well, we've had them with loans involved, and it gets really confusing because the seller, if the buyer, the original buyer is getting a loan and the contract is subject to that loan, and then the end buyer is getting a loan, I'm going to stop my share for a minute. It gets really confusing. We had one where the contract was subject to financing. The person on the contract assigned it to another person. They did not get seller's permission to assign it. We represented the seller. We got a loan. It was a delay. They were going to use the 8-day unilateral to extend the closing because the lender had a delay on the loan. But the loan that was getting delayed was the assignee's loan, and the contract wasn't subject to that. So it gets really, really confusing. And basically, my point is two things. Number one, if you are working with someone that is going to assign a contract, you must get seller's written permission. These contracts are not assignable in and of themselves. Number two, they can be extremely confusing. So please reach out to Doug or me or your compliance broker. Kim and Dawn also have seen more assignment contracts actually than I have. And the third thing is we do have a lot of agents, George Ansong being one of them, who works with investors all the time and is way more familiar with assignment contracts. So they can be very confusing. But Doug, I just wanted to get your take because you do see more assignment contracts and just wanted to kind of get you to walk us through that GAR form. So
Dana, one other thing I wanted to mention in the assignment is that sometimes they try to, the idea of the assignment is the assignee is stepping into the shoes of the assignor. This is not the time to try to renegotiate the contract.
Right.
And I see that where the new buyer is like, well, I'll step into your shoes, but I want to change the closing attorney. I want to change the down payment or whatever. This is not the place to do that. What we're doing is just assigning the contract from one buyer to another. And where I've seen it the most was with contracts. They were investor contracts that were assignable, and they would assign it and try to change terms, and the seller would later say, oh, I never agreed to that. We don't have that problem here because our contracts are not assignable. So presumably the seller is a party to it. My point is the assignment is confusing enough. Handle those changes separately from the assignment, not as part of it. Does that make sense?
It does. George, you're on mute. If you want to add to this conversation, you have to unmute yourself.
All right, thank you. Anyway, I was just suggesting that if it's possible, right, Doug should just put together like a 3-hour something to come and, you know, teach us on assignment, because I think as time goes on, because there's a lot of investors in the industry, we'll be coming across these assignments a lot. So if Doug could put something together and just do a 3-hour CE, that would be very, very helpful, because they're very, very confusing, you know.
I love the idea, and I'd be glad to do some training on it. I'm wondering if I could make a full 3 hours out of assignments, but I can try. I'll talk to Dana about that. And if we can make it a 3-hour CE, that's great. If we just make it sort of like a lunch and learn, we can do that as well. But I'll definitely try and get you the information you want on the assignments.
We could actually do, and I'm going to let Doug, I'm going to let you and George talk together after class. You guys could co-teach a class, because George works with investors a lot and has a lot of coursework. George has taught at Kennesaw State University, real estate investing. So maybe we can co-teach a class where George talks about working with investors, and then Doug talks about the contract part of it, or the legalities or stuff. That might be an interesting class.
Dana,
anyway, I want to push something. I'm writing a book on how agents can work with investors, you know. So so just want to plug it, but I'm working on it. It's almost done, you know. Maybe Doug, I can give it to you to make comments on how attorneys work with investors, something like, I don't know, I'm thinking about it, but I'll reach out to you. But just to plug my book, a little bit.
Great, George. I'll help you any way I can. That sounds great. Thank you.
All right. Thank you, Dana.
All right. Awesome. Thank you both. Thank you so much, Doug, for stepping in extemporaneously on that topic. I appreciate it.
Certainly.
Just a couple of other things. Our classes, based on everything that is going on, and we did the grand experiment with having in-branch classes. Thank you, Doug, so much. You were the first one. We've got one next week today actually, at the West Cobb office, and one later on this week at the Paulding office. We are going back to virtual CE classes probably throughout the rest of the year, at least through November. So we have the opportunity to get to more agents to share education and training. So just so you guys know, we're working on the August and September calendars now, but we are going to go back to virtual classes. Now, some of the sales meetings, it looks like everybody still wants to have the virtual sales meetings next month. We're leaving those issues up to individual offices. So I want to let you know that. I also want to let you guys know Op City, and I'm going to do some more information on this, but Op City has, are any of you guys on Op City? Well, let me briefly talk about this. I'm going to put this in the newsletter. Op City has new referral options. And one of the things that they are doing is they are charging you as an agent a higher referral fee in order to give the cash back or commission rebate back to the buyer. And they're just doing it to quote unquote make them more competitive. So there is, there's a lot to it. You do not have to accept an Op City lead with this. They're calling it the Platinum Referrals and Client Rewards Referrals. For those of you who are on Op City, I just wanted to bring this to your attention. Please stay tuned for Sunday's newsletter. There's going to be a lot more information about that, or contact me directly and I'll share the information with you on that. Also wanted to make a comment on appraisals for whatever reason, and I'm getting ready to do a video on this. There is a lot of confusion between an appraisal contingency and a financing contingency. You guys, these are two completely separate buyer contingencies. In essence, a financing contingency is the lender assessing the risk of the buyer. The lender says, okay, let me look at your history. Let me look at your finances. How likely do I think that you are to pay me back these hundreds of thousands of dollars that I'm lending you? If I think you are a good risk, that is the financing contingency. That is the time frame for a buyer to convince John, I'm a great risk. I promise you I'll pay you back. Look, here's where I've paid back these people. Here's where I've paid back these people. Here's where I've taken care of my financial business. Will you lend me the money or will you not lend me the money? If John says, no, I think you're a good person, but I don't feel like you're going to be able to pay me back over 30 years, I'm not going to lend you the money. Then the buyer must terminate prior to the end of the financing contingency to protect their earnest money. So the financing contingency is an assessment of the risk of the person to pay back the person lending them the money. The appraisal contingency is the lender's assessment of the collateral. If Dana doesn't pay me back and I have to get this house back, can I sell it and make enough money to recoup the money that I risked on the person? So the appraisal contingency is an assessment of the property. The financing contingency is an assessment of the person. So in the appraisal contingency, not only is it price, but there are other issues like repair issues. And I have a plea or a request into GAR to change the verbiage on their financing contingency, on the conventional financing contingency exhibit, because right now, what it says is if the appraisal comes in low, meaning price-wise, then there is a time frame within which a buyer to negotiate with a seller to agree to the lower price, or the buyer can terminate and protect their earnest money under certain circumstances in the time frame. What we are experiencing lately, for whatever reason, and John, you might have a better answer than this, for conventional loans, we're getting a lot of lenders that are requesting repairs. And you guys, that is still, and we're having buyers terminate under a financing contingency for repair issues with a house. That's not a financing contingency issue. You cannot terminate a buyer. They're not going to get their loan, but the issue is the house isn't sufficient collateral due to the state of the house or the condition of the house. So it gets confusing because the GAR verbiage on the conventional loan just talks about an amendment to the sale price. Well, the price appraises, but there's a caveat to that. The house appraises for this price as long as these repairs are done. GAR did have a repair statement in the GAR loan exhibit. They took it out this year and made that a special step. So again, I don't know why this gets confusing. Well, I know why it gets confusing. It gets confusing because the lender's not going to lend them the money if the house isn't sufficient collateral, but agents are terminating under the wrong contingency. So I'm getting ready to do a video on that. And then John, I'll let you comment on that in just a second. And then the other thing is, if any of you guys are acting as an admin assistant for another a brokerage, or any of you guys are using an admin assistant from another brokerage or a virtual assistant, there are forms that I need to sign, and the broker of the admin assistant, if they're not with us, needs to sign. And I'm going to do a video on that. So I just wanted to comment on those things. Again, you guys, y'all get my videos in the Sunday newsletter. I have, and they're posted on my YouTube channel, Real Estate Made Crystal Clear. The YouTube channel is way far ahead of what I send out in the Sunday newsletter. So if you subscribe to that channel, you'll get videos as I do them, as opposed to, like, we're 2 or 3 weeks behind already in the Sunday newsletters from what's already posted. So just wanted to bring a couple of those issues to your attention. John, do you have any comments on the repairs coming across on conventional loans? It's really odd, but we're seeing increasingly more, which is really weird to me.
Okay. So yeah, I do have a few comments about that. And I just want to share those with you. First of all, I can see why that would be an issue, because the way the wording is on that, that paragraph.
Yep.
I also do see confusion sometimes between the difference that you just described between a financing exhibit or financing contingency and the appraisal contingency. They are two totally different ones. And on an FHA or VA loan, the appraisal contingency lasts till the very closing day. So it goes all the way through the end. And I see confusion on that too, where agents think, well, we only have 21 days on the appraisal. We have to get that, or 21 days on the financing, and that automatically applies to the appraisal, and it does not. And that can be a little confusing because there's no date listed on that appraisal contingency on a government loan. But I just want to point out that goes to the very closing date. Now, we don't drag our feet and make it take that long, but that is one of the things there. Now back to—
And for the FHA and VA loan with those exhibits, you cannot write a special stipulation or an amendment to put in a time frame for those. Those government insured loans control over anything that comes before or after them.
Yeah, that's an underwriting rule, and it's called the amendatory clause, and it's there to protect the buyer. And it amends the rest of the contract to say that the buyer has that entire closing time period to get the appraisal in and evaluate and that type of things. Now, back to Dana's question about the repairs. I'm about 80% of my loans are conventional. And I'll just say this, over this year, I have not had one issue like what Dana talks about. And I'll tell you why I believe that's the case is because I always collaborate with the agent when they're writing up a contract. The first thing I do is I pull up the house and I look at it and I talk through the agent. Are there any things that look like are going to be a repair issue? Because I want to know in advance what those are so that we can get those addressed in that due diligence time period and get them repaired before the appraiser goes out. So that's a really, really key thing is you as an agent, you guys need to collaborate with your lender and have the lender talk with you about the things that are gonna be caught by the appraiser. So that's one really important thing. The other thing that's super important about that is that if it does come up, you need to have already had that conversation with the buyer and not just kick the can down the street and hope that it doesn't come up later and then all of a sudden it does. So I think those issues can be prevented by taking initiative instead of waiting and hoping, kind of putting it off on the appraisal and say, well, we didn't get it during due diligence. We'll see if the appraiser catches it. Hopefully they will, and then we'll make the seller do it. That paragraph is written to where that's not a guaranteed, and then you can be in a mess like Dana's talking about. So that's my 2 cents on that.
I don't understand the concept of a conventional lender mandating repairs. I mean, I guess does it interact with the down payment? Because we've got investors that'll buy a house with a conventional loan that's fallen down around their ears, or they're going to tear it down or something, or rehab it. So I don't understand that whole lending concept.
So here's what's happening. So let me just say this. So I've seen probably 100 appraisals so far this year. And I have not had one subject to repairs on a conventional loan. So I will say this, I believe it's because the banks that are the big ones that you think of, the big box banks, they are putting overlays on everything to try to limit their risk because of the pandemic. And so they're instructing their appraisers to be a lot more strict about the condition of the property. We are not doing that. So out of, like I said, over 80 appraisals, I know it's been over 80, probably more than that. I have not seen one that's that way. And I really believe it's because our business model has become more lenient on a lot of things because of the pandemic. And a lot of my, colleagues in the industry are going the opposite direction because they're trying to protect themselves from a perceived risk. So that, I believe, is one of the, and I don't know if what I'm saying is true or not, but I'm just saying out of 80, I would have surely seen it if it's something that's going to happen with our company. I'll put something out on our company Facebook page and see if, I've just, been super fortunate, but I really believe it's other banks that are really being strict about trying to protect their collateral and making sure the appraisers nitpick a little bit more than they're used to.
And I think it is bigger banks because I don't see it that much, but you guys, when I get a broker issue, all of a sudden I'll get more than one issue within the next week or two. It's really odd. So I haven't seen repair issues. And obviously it was an issue because GAR had it in their contract in the exhibit. Then they took it out. So it wasn't as big of an issue. But I've had that issue twice now this week, between last week and this week. And it's really, the contract ended up falling apart. So, but it was just, and the termination got messed up because it was really an appraisal termination, not a financing.
Right.
So,
right.
Awesome.
Very true.
Thank you. All right, questions, anybody? Type them in the chat or feel free to unmute yourself and ask any questions. What are Vernalisi is asking, what are self-employment requirements? And I'm assuming that is to John.Bohannon for mortgages.
Yeah. So self-employment, it depends on the kind of loan they're getting. That's almost like saying it's a very broad topic. So it's really going to be specific to several things. It's going to be specific to how they file their taxes. So I'll kind of give you the several different options. If they're getting a government loan, that's VA, USDA, or FHA, they're going to have to give us their most 2 recent years of tax returns. And we'll do an average of their income that they pay taxes on, not their gross income, but their net income. So that's the requirement there. If they are getting a conventional loan, then if they've been self-employed for the last 5 years in a row in the same line of work, it's possible for us to only need 1 year of their tax returns, their most recent 1 year. So because they're able to qualify for a conventional loan, which is a better loan, then they're able to get a possible omission of one of their tax return years. So that's one other option. Then we have another option for self-employed people that are just like, their tax returns, they don't want to disclose them, or they haven't written, they've written off too much. We'll just say it that way. They can put 25% down on the house, and we skip the tax returns completely, and they just give us a profit and loss statement. So that's one other thing that can really help a self-employed person. I've actually done a couple of those, and they work out really great. So tax returns can be a bear when somebody's getting a mortgage, and it's better to know, for me to see them up front and then be able to tell them, hey, these are your options, Mr. Homebuyer, and let them decide kind of between that collaboration, which one of those scenarios is going to best work for them.
Excellent. That does answer my question. And so the whole bank statement program went away, correct?
Well, it didn't go away, but that's how we're choosing to deal with the bank statements, is because when you go, I do have a 20% down bank statement loan. And I've had several people try to do bank statement loans and can't do it because we have to see consistent income flowing into either a personal account or business account. And a lot of people's business bank statements, if they're a smaller business, are kind of messy. Sometimes they, get cash and they just don't put it in the business bank account. It goes straight into their personal account. They business bank statements are almost like asking about somebody's like old girlfriend. Sorry to, use maybe not a business analogy, but it's like you really don't want to talk about a past relationship. You really don't want to talk about their old bank statements because they didn't know a year or 2 years ago that they were going to buy a house, and so they didn't handle their business income correctly. For the most part, not everybody. I have had one person do a business bank statement, and she was like a former bookkeeper, and hers were spotless. But everybody else that's a business person, usually they're just kind of running and gunning and just like moving money for whatever their business needs are. So I would say this: if they're very organized, then yes, they can put 20% down and get a business bank statement loan. If they're not, then it's probably better for them to put 25% down and just skip the bank statements altogether and just give me a self-prepared profit and loss statement, which those are, very loosely underwritten. So it's not like we're going to question them on a lot of things on there like we would on a bank statement. Because on a bank statement loan, we look at every deposit and have to see where it came from. And then we average them up and count up how many they got over that time period, and then what's their average deposits. And there's just a lot of things that can make a loan go sideways on a bank statement loan.
Awesome. Thank you, John.
You're welcome, Vern. Thank you.
Anybody else? Any questions? Jane, you want to introduce our newest agent? You're muted.
Okay, yes, I would like to introduce Mr. Mike Salerno. He has been with us for about 3 weeks here at Maximum One Realty. So everyone give him a warm welcome, and if we can help him in any way, all he has to do is just let us know.
Do you want to say a few words or introduce yourself a little bit?
Yeah, sure. Hi, everybody. Thanks for welcoming me. So far, it's been great working for Max One. I just moved to Atlanta about a year ago, and I live in East Cobb, and I love it here. My wife and 2 boys live with me, and I'd like to say that the market is hot. I've been trying to search for an investment property, and I was trying to look at 2 this past weekend on the 2nd day of listing, and both times I was about to go see it, and I was contacted saying, sorry, we got a cash offer, and this is off the table now. So got to be fast out there.
Yeah.
Right.
Well, welcome. We are so glad that you have chosen us. We're honored, and you have a lot of help. You can reach out to any of us, and John will help you with any mortgage questions here. Where did you move from?
Miami.
Okay, so the Florida market, I imagine, is different from the Georgia market. So for any financing issues and stuff, John's your person. And for any legal, contractual, not legal, but legal contractual, Doug will be more than happy to help you out. We've got the support, the 24/7 support at My Maximum One, and lots of resources for you. So welcome, welcome. We're so glad you're here.
Welcome.
Thank you. Yeah, I'm working with Donica as well, so she's provided a lot of help also.
She is a wealth of knowledge, that is for sure, as everybody on here. So, all right, you guys. Oh, one more thing. There are, every time I teach a class and I have handouts, well, a couple things. Number one, the CE classes are on my YouTube channel. If you go to the playlist that says CE classes, you can't get CE credit for just watching it, but there is a wealth of information, especially on contracts. We have recorded the RE forms contracts, the GAR contracts, comparing the two. I think everything is recorded except for weird contract forms. I'm teaching that at the end of August, and we'll get that recorded. Additionally, if you go to the reference section of Paperless Pipeline, that is our digital library for you guys. And there is a wealth of information and forms for you there too. And the handouts for all the CE classes I teach are there, and they're all underlined. So there's two places. Either they are in the reference section of Paperless Pipeline, or if you go to www.eagentweb.com, here, I'm gonna share my screen and show you guys that. So hang on. Where's my share screen? All right, I'm going to share my screen. If you go to www.eagentweb.com, there's no passwords or anything. You get this, right? Does that look familiar to everybody?
Yes.
This is your one-stop shop. You can get to Paperless Pipeline from here. You can get to our calendar. You can get to FMLS. You can get to the blog. You can get to our company website. You can pay your bill online here. You can get to our vendors here. You can get to Georgia MLS. You can get to a lot of things from here. This is another resource for you for help. We've got a live chat. I don't think a lot of people knew that. Anyway, if you click here where it says training videos, and then you have to scroll down a little bit, you will see the classes, and you will see all of the handouts to the classes. It's not in that blue that everybody's used to seeing, but you will see a link. So here's that 2020 RE contract forms dissection class that I taught. If you click here, that will take you over to my YouTube channel where you will see the video recording of it. Here are all the handouts. So my point to you is we have a lot of resources for you that here are the PowerPoint slides. But what I have done when I teach the class, for example, in the RE forms, here are the standard terms. If you click here, you will see my notes as if you had been in class and you received this as a handout. You get all of the underlined sections and all of the arrows and all of the highlights. You get all of that is readily available to you. Now, like I said, you can watch the video where I walk you through everything, but sometimes you might just have a question on one part of it, and you know, something that's underlined, it might bring that to your attention. So I just want to let you guys know we have a ton of resources for you for assistance, whether you're new with us, whether you're newly licensed, or whether you have been in the business for a gazillion years, because I guarantee you we get a ton of questions from even the most experienced agents, because if it's something you've never dealt with or a new situation in the market. So you've got that as a resource. You've got me as a resource. You've got Dawn, the MXGR compliance broker, as a resource. You've got Kim, the MXGA compliance broker, as a resource. You've got that live chat. You've got the Rockstars page on Facebook. So there are a lot of places to reach out for help. And that's not only for you, Mike, that's for everybody. So that's it. Any other questions from anybody? Jane, George, as always, thank you all so much for putting together and hosting a fabulous meeting. Jane, any final words?
Just everyone we're hoping has absolutely no health problems. All our agents, their entire families, and hope everyone stays busy in real estate. We're praying for this pandemic to be over, but we're not given a time frame, are we, Miss Dana? So we'll just have to do the best we can. And thanks everyone for coming to the meeting. It's wonderful to see you.
Lots of buyers and sellers are out there that need your help. So go help them, everybody. Go bless them with your license and your experience and your heart. They need you. Bye, everybody. Thank you.
Bye.
Bye.
Bye-bye.
Bye, John.
Bye-bye.
Bye-bye, everybody.
Everyone.
Bye.